Welcome everyone to ITSecureNow's second session of our Back to Cyber School Lunch and Learn series. Today's session is about cyber insurance, where it came from, and what it's doing to the cybersecurity landscape today. My name is Paul Fields. I'm the Principal Security Engineer at ITSecureNow. I've worked in and around IT for about 25 years and have focused on security for about the last decade. Claim denied. Today we're going to examine how insurance companies' evolving coverage requirements are really driving decisions around cybersecurity in all sorts of businesses today. Cyber insurance started as a way for businesses to recover from a fairly small selection of risks, namely hardware and software failures and human mistakes. There was no such thing as cyber insurance. It was just a rider on your standard business insurance policy to help protect your company. In the 1990s bubble, we can see some examples of this. Programming errors that were made in software packages, like the accounting program that actually applies the wrong tax percentage. Now you, as an accountant, file taxes for one of your clients, and you end up either having to refile for that client or possibly even take on the added burden of cost and time associated with, having to walk a client through some kind of an audit. The bane of all businesses everywhere, just downtime. When you as an organization have computer systems that are down that prevent you from being able to produce your goods or provide your services, that costs your company money. And the insurance policies of the day were designed to help companies recover from those particular kinds of losses. Remembering that in the 1990s, almost all data entry at this point was being done by hand, so human error was an ever-present threat. Data entry that had incorrect information in it could lead to production delays and production errors and mistakes in your final product. And all of these things cost your company money. And this was the kind of thing that the insurance policies of the day were really targeting. So as security issues start to hit like the news cycles in the 2000s, cyber insurance, as we know it today, starts to take its most basic form. Security-related events like the unauthorized access and data lost in the slide start to make their way into insurance policies. Interestingly enough, around this time, things like insider threats and fines and penalties and viruses that are in the wild are all expressly and regularly excluded from the insurance policies of the day. Keep this in mind because it'll come up again later. By the mid-2000s, we start to see new kinds of threats emerge. And as these new threats come about, so do more governmental and industry regulations trying to keep up with them. These threats also drive additions of new kinds of coverage in the cyber insurance policies of the day. Additions for coverage on things like business interruptions, where a DDoS attack may take down your corporate network, or a website defacement may prevent customers from being able to interact with your company as they normally would. Extortion is certainly not a new concept, but digital extortion becomes a really valid attack vector at this point. I steal your data, you give me money, I give you your data back. Network damage is a little harder to quantify, but the aging infrastructure of the day leads to vulnerabilities that are taken advantage of by attackers. The equipment that's in place at this point was never intended for the kind of traffic that they're having to deal with, and certainly were never intended to have to withstand the kinds of attacks that are becoming normal. Companies spend a lot of money replacing these appliances, trying to make sure that they get ahead of those devices either failing or becoming a vulnerability that ends up costing their organization. Regulations come fast and furious in this time frame. Sarbanes-Oxley comes about in 2002, and although it's not specifically an IT or cyber policy, it does place the responsibility for the integrity of a company's data as well as the availability of that data on the IT teams. So the IT teams are responsible for making sure that the data that goes to the board or to the C-suite from which they make their decisions is both accurate and available. HIPAA, which has been around for a while at this point, gains new teeth. The privacy policy of 2003 and the security policy of 2005 spell out pretty directly very specific rules for the IT teams of industries that have to abide by that regulation. And the breach notification of 2009 just expands on that. And in the midst of all of this, the payment card industry comes out with their set of rules in the PCI DSS in 2004. As we head into the 2010s, we get to what some people refer to as the age of the mega breach. Hackers for hire and ransomware as a service start to become really cheap and very effective attack methods in this time period, and they still are. Some of those mega breaches, the ones that actually made the 6 o'clock news, included ones like Target and Home Depot and Equifax. Large-scale ransomware as a service becomes a worldwide problem. And the general sophistication of most attacks starts to become notably more complex than it used to be. And we start to see the early attribution of what becomes known as state-sponsored attacks. As risks start to go up, so do premiums. Insurers use the first of their mechanisms in place to help mitigate their own risk and maximize their profits by raising the premiums of their clientele. This is an interesting slide, even though it's not specific to cyber insurance. I think it still tells a story about the insurance industry on the whole. This shows the premium percentage increases over 2 decades for all types of business insurance policies. So this starts in the fourth quarter of 1999 and runs up through the fourth quarter of 2021. We can see in the fourth quarter of 2000, we start this rapid ascent to triple-digit percentage increases for insurance policies of the day. These start to cap out in the 2003 to mid-2004 range, which starts to coincide with some of those regulations and policies that we were talking about before. Sarbanes-Oxley in 2002, PCI DSS in 2004, and the additions of the new rules for HIPAA in 2003 and 2005. All of those regulations occur at the peak of this particular chart. And then after these regulations go into place, the percentage increase premium percentage increase for all businesses drop, but most dramatically for large and mid-sized organizations. In the second half of 2008, we see a really interesting trend where previously the highest premium increases belonged to the large and mid-size accounts, and they ran basically in parity. And in post-2008, we see the higher increases are now being dropped onto the small businesses. We see a steady incline after that for all three sectors heading into that fourth quarter 2019, where we see another rapid ascent in premium increases, most notably and directly caused by the COVID pandemic. So in this slide, we continue with this examination of premium percentage increases, but this one only covers about a decade and is specific to cyber insurance as opposed to the insurance industry on the whole. So we look towards the beginning of this chart and we see in the fourth quarter 2012 all the way through the third quarter of 2013, we see this repeating trend of basically flat and then a single digit increase and then flat and a single digit increase. And if this chart went further back in time, we would see more of the same. There's a presenter at the 2016 Black Hat presentation by the name of Jeremiah Grossman, who did a talk entitled An Insider's Guide to Cyber Insurance and Security Guarantees. And in that talk, he theorizes that insurance companies kept prices low and availability high for cyber insurance all the way through the 2000s and even into the 2010s so that they could gain as much information about how their clients were using cyber insurance as they could. This information was critical for their actuarial tables that they had to have so that they could find a way to make cyber insurance profitable. And they needed this information from as broad a spectrum as they could get. So low prices and high availability meant that companies of all sizes and all industries and all geographic locations would actually get policies from which these insurance companies could garner that information that they needed. So we see a lot of this flat and then moderate increase and flat and moderate increase. And then suddenly in late 20 or in towards the end of 2014, we see this big spike where double-digit increases become normal for the next year and a half. So what happened? Well, at the end of 2013, CryptoLocker, arguably the first of the modern version ransomware attacks, hit. And this was something that was completely new to the industry, and the insurance companies recognized that. They recognized quickly that people did not know how to handle this, and we see a jump in premiums because of it. So why, if CryptoLocker hit in late 2013, did it take so long for these premium rates to come about? Well, CryptoLocker hit in 2013 and nobody knew what to do or how to handle it. So it took them months to do the examination and to do the postmortems to figure out what happened, how to fix it, and how much it was going to cost. And heading in towards the end of 2014 is when we would have started to see the first of those policies and the first of those claims being filed against those policies. So CryptoLocker opened the door, and it was followed by a whole slew of ransomware copycats. CryptoWall and TeslaCrypt and eventually Locky all followed suit, keeping these increases in premiums where they were. So towards the end of 2016, things start to settle down. And that's probably mostly due to the fact that at this point, the newness of the ransomware attack had started to fade, and so had a lot of the fear around it. Two other key factors that certainly contribute to the upcoming flatness of the rate increases would be, one, after 6 consecutive quarters of double-digit rate increases, the insurance industry had to realize that their clientele didn't have much of an appetite for more of the same, as well as the new administration in the United States being voted into the White House in 2016 that had certainly made itself well known to be business friendly and anti-regulation. This leads to a considerable time frame of flat insurance rate changes until we get towards the 2020 timeframe when we see the meteoric rise due directly to the COVID pandemic. So let's examine that COVID timeframe and the corresponding rate increases for cyber insurance. At this point, ransomware and breaches are incredibly commonplace. And unless it affects more than 100 million people, it's pretty unlikely to even make the news. And COVID just made work from home necessary for most companies to continue to function. Insurers knew that, as a general rule, companies weren't ready for this transition. This added layer of complexity makes securing corporate devices in your corporate network even harder than it already was, and the insurance companies respond in kind. As the risks continue to go up, the second mechanism that insurers have to try to decrease their risk and maximize their profits is to start decreasing their coverage. Coverage exclusions are the next method that insurers employ to try to mitigate their risk and maximize their profits. This is going on literally today, including things like just late last month, Lloyd's of London announced that they plan to stop covering any losses at all that are the result of a state-sponsored attack. Now, they didn't specifically say in there who gets to determine whether or not it was a state-sponsored attack, and that will be an interesting piece of information. They also hint at the idea that they won't even offer coverage for any attack that uses a, quote, state-level tool in the attack. So it might not actually even be a state-sponsored attack, but if the attacker uses tools that are known to be a state-level attack tool, then Lloyd's may not actually offer coverage. Other exclusions include things like insider threats and acts of war and fines and penalties. And if you think back to that early 2000s slide, you'll also remember that lots of these exclusions, things like insider threats and acts of wars and penalties and fines for any kind of regulatory violation, those were all in the very first iteration of cyber insurance, and they're starting to make a comeback. So what's left for the poor insurer to do? Well, I guess raising the bar to entry is their, last resort, and it's probably their least favorite tool because so much of it is out of their control. So by this point, they've raised their rates and they've lowered their coverage, but they're still finding it difficult to make cyber insurance profitable. So the only thing left for them to do is to force their clients and their potential clients to reduce their own risk and therefore reduce the insurer's risk. And out of this, these new qualifications for coverage are born. I mentioned the Jeremiah Grossman presentation from Black Hat 2016, and he has a quote in there that I'm going to read verbatim here because I think it really embodies the state of cyber insurance and, by extension, cybersecurity really well. It's only a matter of time before InfoSec's masters change. We're not going to kowtow to PCI. We're actually going to be dictated to by the insurance industry, and that's going to change everything about what we do. So what do the dictates that Jeremiah mentions in his quote actually look like in practice? We see here three separate categories. We've got our musts, our coming soon, and our down the road. And the musts are things that we're already seeing on our clients' insurance renewal forms when we help them to fill those things out. Multi-factor is basically a gotta have for anything with access to sensitive data, for things like your email and remote access and VPN and all of those kinds of things. On many of these insurance policies, if you can't check yes on multi-factor, you are at great risk of not getting renewed or getting that new policy. Backups with proof of the ability to recover, and things like endpoint detection response, which is kind of the next generation antivirus. And some of these policies are even providing an approved vendor list so that you have to go with one of their approved products. Things that you should probably expect to see on maybe your next or at the latest, the one after that, renewal applications will include things like an SRA, a security risk assessment, which kind of coincides with your incident response plan. Insurers want to know that you have a plan in case something bad happens. What is your plan and can you implement it? Compliance and proof of that compliance to whatever is your particular industry best practice, or even one of the government provided or internationally recognized standards that are out there. something like ISO 27001 or the NIST 800-53 or -171. PCI and HIPAA would also be things that would fall into that particular category. Another one that we're going to start seeing more of is a requirement for proof of employee training, policies of least privilege, making sure that not everybody has admin rights. And another one that I've read about, and I haven't seen it on any of our client stuff, but I know some people who have seen it, a requirement for a third-party penetration test, as well as having proof of mitigations from that test within X number of days of your application. And the one that I saw in particular was within 30 days of the application. So company has to have a penetration test, do the mitigations, and have all of that within 30 days of filling out their application for their insurance renewal. And some things that are coming down the road are going to be some things like password management and being able to prove that your people are not using the same passwords over and over and over. Detailed asset inventory, because the insurers are going to want to know exactly what was on your network when you got the policy and what was on your network when a particular breach or incident occurred, as well as things like third-party vendor management. Examples of these questions that we've actually seen on policies that we've helped our clients with include things like what you see up here on the slide. Have local admin rights on user devices been removed? In a corporate environment where you have Active Directory and group policy, this is a really simple thing to answer yes or no. But lots of small companies now, especially with work from home being so much more prevalent than it was just a few years ago, have lots of people who are running on non-domain joined devices, which means that there's a high likelihood that each person using their computer is a local admin. Can you confirm a policy of least privilege? And that kind of coincides with the one before it in the sense that you don't want everybody to have full admin rights to everything all the time. You want to make sure that people can only get to the things that they need. Now, this is true inside your corporate environment, but also should be true inside any and all of your cloud services that you use. If you use an online accounting or an online CRM, you don't necessarily want somebody who works in sales to have access to HR file information. Do you have protections in place for remote access to the corporate network? You know, this can be something very complex, like using FIDO devices and key fobs and all of that kind of stuff, all the way down to something like, yes, we have multi-factor turned on for all remote access to our corporate network. Which kind of continues in the next one is, do you have multi-factor enabled for remote network access? And, you know, the real bugger to these is these are all yes or no questions. You don't get much chance to explain. So do you have multi-factor enabled for remote network access or your email or those different cloud services, your cloud CRM, your cloud accounting that we were just discussing? If you take credit cards, can you prove your PCI DSS compliance? And do you hold, and this is a very, very big one right now, do you hold medical info for anyone other than your employees? So you should absolutely be able to answer that question very quickly. And if you can't, then you should definitely find out. Do you also have any social security numbers for anyone other than your own employees? Quick side note, we were doing a vulnerability assessment for a client, and we went in and did all of our things, and we came back and we said, hey, we found these thousands of social security numbers in an unprotected file, and they were adamant that they did not, never did, never would collect social security numbers. And they were borderline offended that we would even say that. And we said, okay, well, here's the file path. Let's go look at this. And maybe it's a false positive. So we got in there and we went to this file path and we found this old backup file of an Excel sheet. And there were several of them in there that had thousands upon thousands of social security numbers in them. And the interesting thing is the actual last modified date for that file was older than the tenure of anyone who worked in the office at that point. So the file was there before any of them ever started working there, and none of them knew that it ever existed. So, they were absolutely coming from a place of truth in their own mind when they said that they absolutely never collected Social Security numbers, but apparently their predecessors did. Being able to, know how many people do you store personal information for. Um, and further down than that, do you have any kind of HIPAA requirements? Should you be following the guidelines for provider or for business associate or covered entity? Do you have to comply with GDPR? And, we in the United States tend to say, we don't have to worry about GDPR. But if you as an organization do business with a company that does have to abide by GDPR, then all business transactions that you do with that company must be GDPR compliant. So make sure that you understand the ins and outs of GDPR so that you don't find yourself in violation of that particular policy. Continuing in the yes/no questionnaire that from the previous slide, we're starting to see things panned out just like what we see here. Does your company have? And then a big list of things. And these are just followed up with a yes and a no checkbox. Does your company have a CISO and or security officer? Does your company have a current firewall? Does your company have anti-malware on desktops, laptops, mobile devices? Now, sometimes this is broken out into separate sections. Sometimes it appears just like what you see right there where it says desktops, laptops, mobile devices. Most clients, most industries can certainly say, hey, desktops and laptops, absolutely. But mobile devices might be a little bit more difficult to answer yes or no to. Automated patching has certainly been a best practice for a long time. Things like, does your company have an intrusion detection system or an intrusion prevention system? That's the IDS and IPS that you see there, as well as things like data loss protection. Those are filters that if somebody tries to send an email and it recognizes a social security number in it, it will prevent the email from being sent and force you to either accept the risk of sending the social security number or find an alternate way to send that information. Does your company have multi-factor? I know we've mentioned this multiple times, but you will see it multiple times on these renewal forms. And sometimes it'll be broken down into very specific sections like what you see here. Do you have multi-factor for admin access, for remote access, access to systems that contain sensitive data, email, cloud services? The list can go on and on. Does your company have a policy for remote access only be over VPN? Be very careful with this one because if you use services like TeamViewer or something like LogMeIn, then those are not actually remote access by VPN. So you could find yourself in violation of your insurance policy and end up having a claim denied. Does your company have automated backup and recovery? Does your company have an annual pen test or network security assessment? Centralized logging, password complexity requirements, a process for terminating employees. This kind of comes back to companies who have a written process for termination of employees and termination of vendors, which we'll talk about shortly. Shows a level of security in your cybersecurity mindset that helps them to feel like that you would be a good investment. And does your company, again, with that, that showing your security maturity, does your company have a good disaster recovery and business continuity plan documented that is tested regularly? These companies, these insurers want to know that when something bad happens, that you have a plan and you know how to implement it. These renewal policies are also going to start asking about things that you outsource. So they'll ask, what all do you outsource? Do you outsource your backups, data center housing, your IT infrastructure? Do you run just a completely virtual environment where your employees log into a central server that provides them with virtual desktops that they work from? Do you outsource your IT security? Web hosting is one that most companies would have to say yes, they outsource their web hosting. Do you outsource your payment processing, software development, marketing, data processing? And again, coming back to what I had just mentioned in the previous slide, they want to see written policies showing that you absolutely have a plan for how to handle the revocation of the vendor rights, whether it's because of a security incident, because of a contract issue, or if it's simply that the contract has expired and it's time to move on to another vendor. They also want to know that you're logging and monitoring everything that is being handled by your outsourced entities. And they also want to know if that vendor is insured and do you have a hold harmless or indemnity clauses in your contract with said vendors. So we've had all of these slides about what the insurance companies are doing. So what can or what should you do? First and foremost is work with your existing carrier. Different carriers will require different things from different companies in different industries and different sizes and different geographies. So with all of the times that I said different in that statement, it should tell you that a lot of this stuff is going to be really specific to you and your particular circumstance. The only one who can tell you for sure what the insurer is looking for when they ask a specific question is that particular insurer. So make sure that you work with your existing carrier to find out that you're answering the questions that they're really asking. Other things that you can do that will help to show security maturity that I was talking about before, as well as help you with your potential liability, are things like encrypt your data. Encrypting your data will usually lower your premium somewhat, but even if it doesn't lower your premium, what it does do is it will very significantly decrease the impact of any kind of a breach. And if it decreases the impact of the breach, then the claim that you have to file is going to be a lot smaller, which means that you're going to be far more likely to be able to get that particular claim through. Only keep the data you must have. And I'm going to say this one again, only keep the data you must have. We live in a world where storage is really cheap, and we deal with this often, and we have for a long time, and I don't expect it's going to change, where rather than practicing really good data hygiene and clearing out old data and cleaning up, it is much easier and usually cheaper to just buy more storage and just keep the data. And this usually happens for one of two reasons. One is nobody has the time to go through all the old data and figure out what to keep and what to get rid of. And number two, there's almost always somebody who says, well, I might need X someday. So when you hear those, and it sounds so reasonable when they say it, just remember one very, very simple thing. If you don't take anything else away from this entire presentation, remember the following statement. More data equals more risk, and more risk equals more money. So the more data that you house, the more it's going to cost you to protect it. Make sure that you're doing these regular security assessments and pen tests. Now, regular is an operative term here that, depending on your particular industry, may mean twice a year, it may mean once a year, it may mean every other year. But make sure that you are doing some kind of security assessment and pen test on a time cycle that makes sense for your industry. We're starting to see this show up as a requirement for some industries, financial, medical, So it's already hitting those industries in order for them to be able to get their insurance renewals. It's going to end up coming out to other industries over time. Make sure that you use a password manager and enforce good password policies. Um, Password managers are software packages that allow users to make sure that they're using separate and unique passwords for all of their different logins. Password managers greatly lower the success rate of password attacks. There's an entire attack vector called credential stuffing, which is if John at acme.com uses password one for all of his passwords and all of his logins, I don't necessarily know what all of the resources that he used are. But if I know that he always uses John at acme.com and password one, all I have to do is just use those credentials over and over and over on any login screen that I can find online until I hit something that I can get into. Find a cybersecurity framework, something like from ISO or from NIST, that makes sense for your company, and adhere to it to the best of your ability. This gives you, much like what it says, that framework for being able to really look at where your company is in comparison to what a best practice environment should look like. Make sure that you're training your people. And I have some mixed feelings about this because the industry has fallen into this trap where we kind of are training people so we can blame them. We're doing well, we gave them this training and they still did whatever. And that is not a good place to be. We don't want to train people to blame them. We want to train them so that they know how and when to ask questions. Training your people will pay great dividends. And at some point in the not too distant future, proof of your training plans and your training programs are going to end up showing up on these insurance renewals. So start doing it now so that you can actually put people in place and give them the tools that they need so that they can make those good decisions. That incident response and business continuity plan that we talked about in the previous slide, document that. Make sure that all of that stuff is documented and that the people who need to know about it do. Part of your incident response and business continuity should include your RTO and RPO. Those are your recovery time objective and your recovery point objective. So your recovery time objective is how long will it take you to download your backups either to a new system or to a refresh system so that you can start back up. Is it going to take 12 hours? Is it going to take 24 hours? Is it going to take 36 hours to download? That's your recovery time objective. And you should also know what your recovery point objective is. That is how much data are you actually going to lose. So if you only do backups once a week, then your recovery point objective may be 7 full days. If your failure happens on day 6, you're going to lose all of that week. If you back up every day, then your recovery point objective should be the previous day's backup. And then last but not least, regularly run and test. Please, please, please regularly run and test your backups. This is certainly continuing to become a requirement on these renewals. And from an IT person's perspective, I can tell you there are few things in this world that will make us feel more hollow and more sick more quickly than trying to do a restore from a backup and having that restore fail. Here's my reference slide. Basically, there's a handful of articles from the Council of Insurance Agents and Brokers and the Government Accountability Office website called Cybersecurity Dive, where I pulled a lot of the information in the slide, the charts that you saw in the slide deck. There's the second one there is the link to Jeremiah Grossman's Insider's Guide to Cyber Insurance presentation from Black Hat 2016. I definitely recommend giving that a watch. It's incredibly informative and kind of scary how much stuff he got right when he was predicting this some 6 years ago to where we are today. And then the last one on there is the registration link. If you want to send that link to somebody so that they can join us at our next cyber school lunch and learn, the link is right there. Feel free to pass that on. Thank you all so much for your time today. I appreciate it. IT Secure Now appreciates it. Just a quick reminder, our next back to school cyber lunch and learn will be on Wednesday, October 5th at noon. Everyone who is registered for today's is already registered for that one. I hope to see all of you there. If you know of anyone that may be interested or benefit from that kind of a presentation, please pass along the link from my reference slide and let them get registered. And I hope to see all of you there. Thanks.